Hello, hello, hello. My name is Kanisha Coleman. I am the Beauty CPA. I help beauty entrepreneurs save money with effective tax planning and bookkeeping services. Thank you all for joining me and coming to see me tonight. I know it is New Year's Eve, so I will try my very best not to take up too much of your time. But there was a couple things like breaking news this week I wanted to make sure that you all knew about, right? Because it's kind of like, okay, it happened Monday, Tuesday, here come the holiday, we don't forget all about it come Monday, January the 4th. So I'm popping on real quick so I can let you guys know all about, some of the changes that's been happening earlier this week. I'm just getting to my notes. Bear with me for a second. Um, but it is New Year's Eve, and I know y'all got things to do. Either y'all working hard, trying to make people look nice, or you probably getting ready yourself, going to do something. Let me know in the chat if y'all gonna go out and do something tonight. I really want to know. I'm doing nothing. I am doing nothing. I live like in the suburb right outside of Chicago. And Illinois has been pretty strict. Like, ain't nothing open, nothing. No bars, no restaurants, no movie theaters, nothing like heavy on the entertainment side. Like, even if I wanted to do something, I couldn't do anything. I don't have a lot of family where I am. I'm like an hour from Milwaukee, Wisconsin, and maybe an hour 15 from the city of Chicago. So, so yeah, I ain't doing nothing. I am at home. After this, I'm gonna go watch a movie with my 8-year-old daughter and my husband, and we just gonna chill out. I'll probably be honest with you, don't even make it to midnight, but I'm gonna make it to midnight somewhere, I'll make it to midnight somewhere. So let me get I got my notes. I got my notes together. So yeah, let me see what y'all gonna be doing. I'll be on the couch watching a movie. There you go. Ain't nothing wrong with that. Ain't nothing wrong with that. Free and safe. Free and safe. Um, okay. So this is what we're gonna do tonight. We're gonna talk about. I'm gonna let you know some things that's gonna be about the PPP 2.0. I like to call it PPP free money, okay? It's free money 2.0. But I'm going to talk to you about the second round of the Paycheck Protection Program. I'm going to talk about some updates, some tax updates. I'm not going to spend the entire time talking about tax updates because it's like the usual stuff. I'll point out, some interesting things. And then I'll remind you all about some tax planning. So let's get right into it because, like I said, I don't want to hold you long. I know you're probably making someone beautiful right now, or maybe you're just kicking back. Whatever it may be, more power to you. One thing I do want to do, two quick things, right? I want you guys to know that the tax planning bundle is still available. Okay. I've gotten some messages from folks still wanting to get in on the tax planning bundle. It is still available. It's $75. It's in the first link in my bio. If you guys are in a situation where you're still trying to figure out what business entity structure you should be, this bundle has tons of resources to help you figure that out. Not only when you're just starting, but if you've been in the game for a while and you want to know if you still should be that entity structure. The reason why that's important right now is because we're going to go into another year. And so if you can save money on taxes by switching entity structures, which is a pretty quick, easy thing to do, you might as well do it to lower your tax bill. So check that out if you're still interested. Again, it's $75. It's 50% off. When the sale's over, it'll go back up to its original $150 price. And then secondly, as I talk about this PPP 2.0, if you want to talk more about that or tax return preparation services, remember the IRS is going to open January 27th, 2021. So like 27, 28 days, they're going to be opening. And so if you're interested and you want to talk about me prepping your tax return for your beauty business, or you want to talk more about PPP 2.0, there is a link in my bio called the Quick 15 Minutes with the Beauty CPA. Hit that link. It's free. Book your call and we'll get on the phone. We'll talk about your specific situation. So let's get into PPP 2.0. or like I like to call it, free money 2.0. Why do I keep saying free money? Because these loans can be forgiven, right? So if you again, okay, so let me start from the beginning. PPP, for the newer people that hadn't heard about this or wasn't paying attention before. PPP stands for Paycheck Protection Program. Paycheck Protection Program. And it's 2.0 because the first round happened back when the pandemic first started, like around March, April-ish. But this past weekend on Sunday, our president signed the latest bill reestablishing that program. So now we got PPP 2.0 or free money 2.0. These loans can be forgiven. So if you get a loan, you use it as it's supposed to be used, you can get it forgiven. So therefore, it's free money, right? So let's talk about just some real quick eligibility, right? So you must have your business must have experienced at least a 25% decrease in revenue. And what they're doing is they're going to compare the revenue from this year on an 8-week period or a quarter. They're going to compare that to the same quarter in 2019 to see if you had that decrease. Okay? So if you want to do this for yourself real quick, go to your books, your accounting records, and see how much money you made for every quarter of 2019. And if you compare that to how much money you made in 2020 for every quarter, if you experienced at least a 25% decrease in revenue, you're eligible for the PPP program. Okay. Now, it doesn't matter if you did or did not get it the first time, you still can take advantage. Hey, real estate CPA, I see you. Thank you for joining. If you did or did not get it the first round, you are still eligible to get it this go around. Now, quick note for y'all that already got it the first round, right? Let's say you got it, and let's say now that you know it's available again and you need more money, you can get a second pull. You can get a second pull from the program. So don't think just because you got it the first time that they ain't messing with you this time. You can still get it, okay? There's a little bit of a difference this time. The first time you can get up to $10 million loan. This time it's capped at $2 million. Let me tell you why. Do y'all remember what happened that first go around? That first go around, huge businesses were using technicalities and loopholes to get these loans. We're talking some really big businesses. I think one of them was like Potbelly had got it. The PPP loan funds. I think, was it Shake Shack? Maybe Shake Shack. I heard like the Omni hotels. It was like some pretty big businesses that probably didn't really need this money, getting this money. And smaller businesses like myself, like you, I'm sure, were pissed. What are you doing getting this money? It's meant for businesses like us. So to not go through that situation again, they brought that loan amount down from 10 million to 2 million. And I believe you have to have less than 300 employees. So they're trying to kind of mitigate that from happening again. So the loan amount, how much can you get? 2.5 times your average monthly payroll. That's how much you can get. Okay. Now I know some of y'all thinking well, I don't have any employees. I don't have payroll, right? If you're a sole proprietor, single member LLC, multi-member LLC, this is going to be the net profit that you took home. Okay, this is going to be the net profit that you took home from your business. So do not think that you can't get this money. You can get this money. It's just that what you pay yourself is not like payroll, right? Not literally payroll, right? It is going to be your net profit, what you brought home. Okay, and then now, how is it forgiven? I'm not going to go deep into the forgiveness rules because that's a whole nother live that I will do. I can do that in the coming week, right? Maybe the first or second week of January. But as long as you are spending that money on what it's supposed to be used for, you have potential to have it forgiven. right? There's a certain percentage of your loan amount that needs to be spent on qualified expenses. And if they see that, they'll forgive it all. Okay. So let's talk about some qualified expenses. The first go around, it was very, very simple, very, very easy, right? It was things like obviously payroll. This is all about payroll, right? And keeping and retaining employees and paying yourself. So payroll or compensation costs was covered. Rent, utilities, like the obvious like stuff that you need for your business, but they've expanded it. They have expanded it this year go around. They're including stuff like, okay, fixing your property in the case of a public disturbance. That to me means like looting, right? Some looting happened because we don't had our fair share of protests, right, this year. If something happened to your brick and mortar because of like disturbances or looting, you have to fix it. You can use this money to pay for that, and it's like a qualified expense. You can also use this money for PPE, right? So like if you had to, deck out yourself and maybe your staff or whomever coming in and out with masks and whatever else, that's covered as well. If you have to do anything to your facility to abide by your state or city regulations for COVID, you can cover those expenses. So you know how like, I know when I go to the nail shop, I see like the big plexiglass up now, so we ain't breathing on each other. Or like when I get, when you go to anywhere and you pay for something at the register, they got these big clear shields up. I don't know how much that stuff costs, but whatever it costs is now covered under this loan program. All right. And then these last two categories is like opens the door to almost anything, right? Expenses to suppliers for things that you need to operate your business. That's like everything. Like everything fits in there. And then the last thing they're saying is like software to run your business or like for accounting and payroll and HR, stuff like that. So out of all of these categories, both new and old, it sounds like as long as you're using that money to pay for all that stuff, loan forgiveness is that potential is very high for you. So don't go get no new car. Don't do that. Don't do an owner's retreat to Cabo. Although I could use it right now. That'd be awesome. But yes, you get my point. Use the money with what it's meant to be used for. And there's a high chance it will be forgiving. Now, this is breaking news. And this is very, very, very important to me. And it should be to you as well, right? The new bill that Trump signed on Sunday, it now allows for the expenses to be tax deductible that you use the PPP funds for. So before he signed this law, anything that you used PPP loan money to pay for was not tax deductible, right? So if you spent $10,000 to retain your employees or pay yourself or pay your rent or your utilities, whatever, if you pay that money, if you use the PPP loan funds for those expenses, you cannot deduct them on your tax return. Do you know how high your tax bill would have went if you could not deduct these funds? So, but they fixed that problem. They fixed it. So remember this when you're going into this tax compliance season next month. Remember that you can deduct the expenses even if you paid for the expenses with PPP loan funds. Okay, you said, I have a question here. Is that still based off of 2019? I am thinking that you're talking about payroll or compensation. And my question to that will be yes. It's going to be based off 2019. If anything changes with that, or if I learn something new from all this development, I'll come back on and I'll let everybody know, or I'll make a post about it. Okay? But I believe it is still based on 2019. Because like we haven't because I remember when I was doing this with my clients before, we were looking at the 2019 Schedule C or the partnership returns. And we haven't yet filed for 2020. And so unless there's another mechanism to determine that, I'm not sure. But if I learn something new, I will let y'all know. Okay. So, yeah, so just remember when you're going into tax compliance season, you can deduct these expenses on your tax return, even if you pay for them with PPP loan funds. Okay. And if you are ultimately forgiven, that is not income to you. Remember that. If you go to somebody, if you go to me, ain't gonna have no problem because I stay up on this stuff. But if you go to somebody else and you see that they put down like your forgiven loan amount as income, or they're not deducting your expenses, you make sure you let them. Beauty CPA said you can take those expenses. Okay. If you are a new business, you can go for PPP 2.0. So like if you started in 2020, you still can go for PPP 2.0 as long as you started your business by February the 15th, which is like when they say the pandemic started, right? So obviously your base to figure out what you can borrow will be limited, right? It'll be much smaller because you wasn't in business in 2019, but you still can't go for it. Now I would encourage you to do so because, this is called PPP 2.0, but it is definitely free money 2.0. So go get it. And remember, guys, if you want to talk more about this, about your specific situation, I have a link in my bio. It's going to be called 15 Minutes with the Beauty CPA. Just use that link. You can book a call with me and we can talk about it. All right. So that is it for PPP 2.0, y'all. I think the SBA has like 10 business days to set out like rules, regulations, processes, and stuff. So we will wait on that. Probably expect that to be live, in the coming weeks into January 2021. All right, let's talk about some tax updates. Now, tax updates, I'm not going to go deep into this, right? You can kind of expect for all the usual things to increase, right? Standard deductions went up for everybody. All the filing statuses, of course. Tax brackets, the income ceilings, they increased. Of course, what you contribute to a retirement fund or HSA, that of course increased. Earned income credit, people to allow more people to be eligible for it. The income range widened so more people can get it, and they increased the credit amount. So, but that happens like normally with inflation every year anyway. But there are some very like unique things, right, that happen that I want to point out a couple of the ones that I like. So number one, before COVID, the only way you could deduct charitable deductions was if you itemized. If you itemize on Schedule A. If you took the standard, you did not get like charitable deduction. But this year, because of COVID and because they want to encourage you to give to people in need, if you take the standard, you can benefit from up to $300 charitable deduction. Now, I know that's not a lot. It's not a lot, but it's something. It is something. So if you've donated in 2020, you can take $300 of charitable donations, deductions. I think they should keep that. Even when we get past this pandemic, they should always be encouraging folks to give back, regardless if you itemize or do the standard. You should get a benefit from anything you give to charity. I mean, it's just a really good motivator to get people to donate because they know they could take it on their taxes. I mean, obviously that shouldn't be the reason, but you know what I mean. Another one. So the bill that not this latest bill that he signed, but earlier this year, a part of the CARES Act that happened earlier this year. I want to remind you guys, leasehold improvements, before they passed the CARES Act, leasehold improvements were not eligible for 100% bonus depreciation. Now, let's say, what's a leasehold improvement? Let's say you move into a new salon or spa space, right? You don't own a whole building, but you're leasing it out. And you make some improvements to the inside of the salon or spa. It could very well be a leasehold improvement. Now, under the old law, you could not deduct the whole cost of that improvement or that change. you had to depreciate it and deduct it over 39 years. So like if you spend, let me calculator, if you spent $10,000 getting your space together and you depreciate it over 39 years or 27 years, $10,000 divided by, let's say 27, $370 a year. That ain't nothing. That's little pennies in the bucket, right? But they changed it. The CARES Act corrected it because they didn't mean to do that. They corrected it. So if you spent, let's say you spent $10,000 again, and to fix up your space or whatever, it's now considered 15-year property. 15 years. And because it's 15 years, it's now eligible for 100% bonus depreciation, meaning you can deduct your whole $10,000 in the year that you spend it. So remember this. I've seen this a lot. Lately on some returns I've been reviewing. Maybe the CARES Act wasn't passed by the time you did your 2019 return, or maybe it was passed, but your preparer wasn't aware, or maybe the software they used wasn't updated. I want you to go back to your 2019 tax return. I want you to see if you spent money on leasehold improvements for your salons. Because if you did and it's being depreciated over 39 years, it should be 15. And if it's 15, you can take all of it, the entire amount in 2019. You may have to amend your return. And that's okay. You can e-file it. You can e-file amend 2019 now. So that makes it easier and quicker. But go back and look at your 2019 return to see if you have any leasehold improvements. And if it's 39 years, you need to amend your return to be able to deduct all of that cost. Remember this going into this new tax season. If you spent any leasehold improvements, remember that you can take the entire amount because it is now considered 15-year property and it's eligible for 100% bonus depreciation. Okay, another very interesting update, and this is more so starting tomorrow, 2021. They are allowing 100% deduction for meals just meals. Entertainment is not deductible anymore, but meals. So any catering, delivery, takeout, if it's a business meal, you can expense the entire amount starting in 2021. Now, before you can only get half. Before it was like just 50%. But starting tomorrow, 2021, you could take the whole amount. So, eat good in the neighborhood, okay? And then I want you to remember, this is just a reminder. IRS opens January the 27th in 2021. So if you got some cleanup to do in your bookkeeping, you got about 4 weeks to do it, okay, before the IRS opens. So you can go ahead and file your return as soon as they open. So this is my last tidbit, and then I'm going to let y'all go. Have an awesome New Year's Eve. Tax planning, guys. Do not forget, we're going into a new tax year tomorrow. The more time you have to implement tax strategies, the more money you save. Every day you let go past without implementing tax strategies, you're leaving money on the table. Like I said before, I do have a bundle that will help you with tax planning, okay? It's the first link in my bio, $75. It's on sale for New Year's. It will go back up shortly to its original $150 price. But hi, Kim. Happy New Year to you too. And I can't wait. I am happy and just honored to be working with you as well. I'm going to have to do a joint live with you because I would love for everybody to hear your story. But I'm sorry. Let me get off my soapbox because I'm fanning over here over Kim and Girl Ken Lashes. But yes, again, tax planning, guys. You got to remember, tomorrow is the start of a new year. Start thinking about tax planning. I do not want to hear y'all next year this time saying, what can I do to lower my bill? Nothing, because you waited a whole year to do it. So just remember, every day you let go past without tax planning, you are leaving money on the table. Check out that bundle. It's the first link in my bio. If you want to talk about PPP with me, book a call. We can get together and talk about it. Last thing I want to do is I want to have a cheers. This is cheers to you guys. Okay? Stay humble, hustle hard, and this is a toast to beautypreneurs. You got through 2020. I'm not saying tomorrow is going to be a 180 difference from what you've been going through, but I want to salute all of you for hanging in there through this tough ass time in our industry. Remember, hey, it's people out here that got your back, including me. I am one of them to help you, but I do want to raise a toast to beautypreneurs for being resilient and hanging in there. We're going to get through this. This too shall pass. So again, a toast to you. Happy New Year. I'm bringing in 2021 with a bang. Okay? Y'all be safe. Have fun, but be safe. And I will see you next year. Okay, good night, guys.